Good night, folks. We are Wednesday, 25 of December. Quick update on MVST. It will not be long, but you need to be focused to understand. As you can see, you have the chart in this video of CLOV, CLOV. Why? Because CLOV have a very similar story of what's going on with MVST. Let me explain. At the end of April and the first day of May, we were at 60 cents. The stock was priced for bankruptcy, basically going in bankruptcy. Then, like MVST, CLOV have released good earnings, showing that they were a kind of turnaround story. Okay. So as you see, huge volume, this and that. Then the price going up. And you see the two red circle. Why? Because basically the first one down, it's the moment the 100 moving average crossed the 200. At that moment, surprise, the price of CLOV was around $1.8 per share. Strangely, MVST, the 100 moving average, just crossed the 200, like here, and we are at $1.8. Okay? Look what happened after. A few days later, we have been turning around $2 in the last day of July, first day of August. Some consolidation, let's say, around $2. Then, after 1-2 weeks of August, a huge run on high volume that bring the price to $3.8 per share. From there, you have profit taking, day trading, going out, this and that, and we fall around $2.4 per share. Then consolidation around 2.6, 2.8, and again another run in October, will bring us to $4.8 per share. So, if MVST follow the same pattern, you will tell me one story is not another, and you will be right. All depend because the shorts are not the same, the float is not the same. Well, it's not so far away. I think the float of CLOV is a little bit important. I think there is around 400 million shares, while an MVST is around 312, I think. So, but let's say it's quite the same story. CLOV is not profitable. They are in the direction to be profitable. And the growth rate of CLOV is around 10% actually. And I think the growth rate for MVST is a little bit more important. Anyway, just to tell you that why I'm looking for this moving average crossing, because that's huge technical indication. When you have the 50 moving average crossing the 100 and the 200, that happened already on MVST, and then you have the 100 moving average crossing on the upside the 200, you have what we call triple golden cross. The 50 moving average who cross two line, and the 100 who cross the 200. It's a huge technical indicator. So, actually, what I'm expecting here, if we follow the same kind of pattern, is that it's possible that for 1 or 2 weeks we will be turning around 175 to 210 in the case of MVST, before we have huge volume coming and we go above $3. All that will depend a lot of things, but roughly, what I want you to remember, it's the general movement. The numbers, we don't really know, all depend. It's very complicated, because back in time, there was a lot of shorts in CLOV. There is less short officially on MVST. I don't know about naked short of short shares in the dark pool. All these people are market makers, are full of tricks. The calls, the puts, this and that, the expiration date. So one story, it's not another. But I want you to see the general picture. And the general picture is that we may stay 1 or 2 weeks around $2, but we can expect this kind of huge run at the moment. The technical indication of the 100 crossing the 200 with some delay, as you can see in the case of CLOV, that happened like 2 weeks before the run. So that just happened yesterday on MVST. So maybe the 7th of January, the mid-January, we may have the same kind of run who will bring us above $3. So I'm trying to share that with you to show you that when I'm talking about $3, $4, $5 price target, I'm not dreaming or selling Kool-Aid. This is happening in the case of CLOV. And CLOV is another sector, healthcare, Medicare, another kind of growth, a lot of difference, but the chart and the indicator are the indicator. And here, the market show us that the 100 moving average just crossed the 200. So take advantage of all the dip you may have. I don't really know. We can even go, don't be surprised. I don't want to scare anybody. That's why today I've been losing some money. Why? Because I was how do you say, misguided by the pre-market activity. There was 1 million share trade in pre-market above $2. Everything was indicating that we are going in the direction of 245 to 280. Unfortunately, the short were very active today. They take advantage that a lot of people are in holiday, the low volume day, and basically they crushed the price from 210, it was I think the high of the pre-market, until 173.74. So I expect that the next 2 weeks will be very volatile. Don't be scared, but it's possible we even see 155, 156, I don't know, and $2.10 on the upside. We can turn around these two price in the next 2 weeks, and that will be kind of floor we're going to build to get ready for the huge run of mid-January, something around that, maybe the 7, maybe the 10, if we follow the same pattern. Because naturally, when you have a stock coming from 60 cents, like CLOV, around $2, you have a lot of people who have made a lot of money. So these people go in and out. In my case today, I lose money. Why? Because I see all this activity in the pre-market. I say, okay, I need to take a position back because I've been selling the day before, and I want to get back when I see all this activity. And I've taken advantage of a small dip at the open at 190. And then 190 was not the floor. We have been going down. 108, 177, 175. I say, okay, they want to bring us to 156. Let me get out. I take a small loss. And I've sold at 1.8. So I buy at 1.9, I sold at 1.8. Then what I see, I see a manipulation. I see a huge dump that brings us to 173.74. And then 15 minutes later, the same candle, but green, of the seller who reload his shares. So it was a kind of shake the tree action by selling and then rebuying. And then I say, okay, we are crossing some downtrend line. I will take my position back, and I have been reloading at 1.8. So just to follow the pattern, because a lot of people will ask me what I was doing. I've been buying at 1.9, selling at 1.8, and reloading at 1.8. Now, I know that in the days to come, it will be tricky. It will be tricky because we need to build the floor for the next run. And we don't really know at what rhythm. We go to 1.5, we stay at 1.8, we spike at 2.10, we go directly to 3, nobody knows. So that's why I was trying to show you with CLOV that this kind of movement is very usual, and that you need to get prepared for the big run for January, who will bring us certainly above $3. And then you will have another consolidation period, and from there we're going, if we follow the pattern of CLOV, to $5. So give a look, do your DD, and I just want to share that with you so you can have some view on why we are talking about this target. Take care, thank you.